Hey guys, welcome back to this YouTube channel. My name is Salvador Briggman. On this channel, I talk about everything crowdfunding, Kickstarter, Indiegogo, and of course, we also cover the topic of equity crowdfunding. And more recently, equity crowdfunding has been in the news. It's grown from 74 million in 2018 to topping 1.1 billion in 2021 in terms of total funding. And a lot of this is due to raising the actual cap of how much you can raise money up to 5 million. So a lot of the guys we actually talk about on this channel, a lot of the platforms you will recognize that are actually contributing to 80% of this funding volume in 2021. That is WeFunder, Start Engine, Republic, Seed Invest. A lot of the guys we talk about on this channel are really the ones that are contributing to this massive growth, which is so exciting. And I think clearly this is a viable way for any entrepreneur, startup, or small business to secure capital nowadays. Let's talk a little bit about this growing opportunity, how you can take advantage of this, and also let's define some of those key terms, and it's coming up right after this. So I actually got started in the industry back in 2012, and I was doing an analysis for my mini econ thesis. And originally, I was actually hoping to do it on equity crowdfunding, but honestly, there just wasn't enough data out there in the world to be able to do that. So I ended up doing it on Kickstarter, Indiegogo, and kind of comparing the different categories there. But that being said, the Jobs Act had basically just been passed, and it didn't really become enacted until 2015. And it wasn't until later we really just saw more and more companies using regulation crowdfunding, and specifically a lot of companies out there now using it because of the funding limits which have been raised. So we're seeing more and more companies doing this, and it is so exciting. In fact, total financing actually exceeds in 2021 all financing from 2016 up to 2020. Now, in doing my research for this video, I honestly didn't find a lot of the definitions out there to be super useful when it comes to equity crowdfunding. Because if you're trying to use this thing, you don't want some kind of like esoteric definition. You really want something that's concrete and that's going to be useful for you. So that's really the purpose of this video, is to just define this and also to kind of get into the nitty-gritty when it comes to equity crowdfunding. So to throw out a definition so we can kind of work with it, equity crowdfunding is raising capital through the crowd for a startup or other venture through an online FINRA registered crowdfunding portal. Of course, we're talking about in the United States. So it's actually not just limited to the United States. There are a lot of great companies out there in UK, Crowdcube, Seeders, who I actually think pioneered the equity crowdfunding industry and have done way more initially in the early days when it comes to this industry. So to kind of boil that down, that jargon down, it's basically a way, and I would say a process. You want to think of equity crowdfunding as a process which you can use to raise money from accredited or non-accredited investors. So let's give a little bit of an example here. Let's just say that you have a hot startup company. This could be anything in the way of a beverage company. It could be a software company. It could be coming out with a new e-commerce product, anything under the sun, right? And you are like, I need actually capital to grow this thing so I can have a massive launch. I can grow it. I can start hiring more and more people, and I can really get some of those milestones that I've been looking towards. If you are looking to really secure capital for your business, there are only a couple ways to do that. And historically, it was always basically trying to go out there and trying to either raise money privately from what are called accredited investors, or family and friends rounds, or using credit cards, or getting loans, or trying to get the bank on your side, right? There really weren't that many ways in which you could use the internet in order to secure capital, aside from Kickstarter and Indiegogo, which are pretty much pre-sale platforms and also working with creators, right? Or patrons of the art when it comes to that. So with equity crowdfunding, cool thing is it kind of came in as like, you know what? We're going to create a whole new set of securities exemptions, AKA regulations, where you as an entrepreneur can raise money from anyone out there. Whether or not they're an accredited investor, it does not matter. It could be a non-accredited investor, and they can see your offering, which is what's called general solicitation, and they can actually invest in your startup company. So basically, rather than just going and doing a traditional VC round or getting a bunch of super angels together to fund a round, or even necessarily going to that initial angel investor, and instead you might say, you know what, instead, let's bring this to the crowd, right? So what you're gonna do is you're gonna launch a campaign on an equity crowdfunding platform. You're gonna have a lead investor of some kind who might be that angel that you were talking to, and all of a sudden, all of your friends and family, all of the people that they know, as well as everyone online, can participate in an actual equity crowdfunding campaign, which is so freaking exciting, right? Because not only does that mean that you can get strangers involved in actually understanding your business and become an investor in your company. It's kind of like a mini IPO if you want to think of it that way, right? But in addition, these people can become evangelists for your brand. So not only are they investors, maybe at $500 a pop or $300 a pop or $1,000, right? They can also be consumers of the actual product or the software tool that you have, tell their friends about it, and there's this incredible network effect. So let's get into some of the specifics here when it comes to equity crowdfunding, right? So I think there are two kind of things that I want to hone in on this video that really, to me, define the process, again, the process of equity crowdfunding. And I think that this will really help make it much more clear in your mind as well. So the first one is the regulation that you are raising funds under, okay? And the second is the type of deal that you're offering to investors. So when it comes to equity crowdfunding regulations, these are basically securities exemptions, and definitely you should consult a lawyer, an attorney, someone who's very experienced in this area. I'm a YouTuber. I'm just kind of providing this for my own opinion. This is not in any way kind of legal or tax or accounting advice. So when it comes to equity crowdfunding, there's kind of like three main regulations that I would kind of lump into that category, but it definitely is debatable. So first of all, there's Regulation A+. Then there's what's called Reg D or 506C. And then finally, there's Regulation Crowdfunding, right? Now, Regulation Crowdfunding is kind of what's been getting all of the hype more recently. I'd say Regulation A+ is kind of what actually pioneered a lot of the industry with these much bigger raises. You know, I'm thinking like Elio Motors and those kinds of campaigns, as well as real estate crowdfunding, which I wrote a book on real estate crowdfunding. And a lot of those companies were raising money using Regulation A+. So to kind of make it more specific here, Regulation A+ is described as a mini IPO. It's basically an offering document that must be qualified by the SEC, and issuers, according to these stats, may raise up to $75 million from both accredited and non-accredited investors. The main thing when it comes to this is like, while yes, there are massive caps, right, at $75 million, and you know, that's insane, but at the same time, there's a lot of onerous regulation. It's gonna cost you a lot of money in terms of attorney's costs to actually do one of these things. And it's usually if you're doing a much bigger raise of some kind or established companies, not really a startup who's just looking for a little bit of cash when it comes to a seed funding round. So historically, this has been used by established companies, well-funded companies, or in some cases, actually real estate crowdfunding has used this exemption or this regulation in order to raise funds. Regulation D 506C is for accredited investors only. Now, I've been throwing those terms around, accredited and non-accredited investors. I'm not gonna cover that too much in this video. I do have another video out there on YouTube that's kind of going through accredited and non-accredited investors, but basically an accredited investor is someone who's like a super high net worth individual, has the ability to take a financial loss. In addition, an accredited investor is determined like a sophisticated investor. Whether or not that's true, again, is debatable, right? Particularly with everything in finance. But a non-accredited investor is like an ordinary individual who doesn't have a super high net worth, who doesn't have a massive income every single year. They're an ordinary person who wants to invest in a company. And previously, again, that was illegal, but it is now legal. So 506C is for accredited investors, but issuers may raise an unlimited amount of money from an offering promoted online. And that's the kind of the key thing when it comes to the Jobs Act, is that for this one, it now enabled general solicitation. So before, it was all like hush hush, right? Behind closed doors. We can't talk about this. This is only for rich people, right? But this kind of made it allowed so that you could actually promote these offerings online and use general solicitation under this particular regulation. Finally, we got Regulation Crowdfunding, man, which is the one that I am most excited about these days. So Regulation Crowdfunding started allowing firms to raise just $1.07 million, but in the past year, the SEC dramatically improved the rules surrounding this exemption, including an increase to a $5 million funding cap. Now, when I started to first hear about all this and read about all this, I put this in my book, Equity Crowdfunding Explained, it was like, oh, it's so frustrating, right? Like there's just so much to understand and so many securities exemptions and regulations. And it's like, can I even understand this, right? So let me just try to demystify this as I talk about on my channel. Let's try to make this a little bit simpler for you. Essentially, there are a few main differences between equity crowdfunding and a historical way of raising a round. And let's go through those. So first of all, general solicitation, major, right? So before, again, it was all hush hush, like eyes wide shut parties, and people are just like talking about finance behind closed doors, and like only the rich people are allowed to do that, right? But now it's actually general solicitation, meaning that you can actually promote offerings online as long as you only use tombstone style information. And I'll believe you, if you look at some of the marketing, it's a little bit on the gray side, right? But as long as you only use tombstone style information in your advertising and your marketing, you can promote these offerings online, which is now legal. The second is that you can now market these offerings, and you can also get those people to participate for non-accredited investors. So with equity crowdfunding, the reason why this is different from everything else that's been out there before is that you can actually get your mom and pop you can get your friends, your family, you can get anyone who's been interested in your company to that point in time. If you have a mailing list of some kind, you can send out promotions, you can get those people to come invest it. I definitely recommend checking out my video on marketing an equity crowdfunding campaign, or specifically a regulation crowdfunding campaign. So there are a lot of things you can do when it comes to actually, getting those non-accredited investors involved and excited about your business. And that means that you're not just limited to a really small pool of people, but actually a massive audience of people all out there online, and they don't even have to be from the United States to participate in your offering. The next thing, and this is kind of for me what I got really excited about when it comes to this, and obviously I'm like super excited in general, but very specifically, what I like about this is that this incorporates a lot of what I call crowdfunding mechanics. So I've been studying this again for many years. I wrote the book Kickstarter Launch Formula, where I really document the entire process of launching a Kickstarter campaign effectively, successfully, and what you got to do every step of the way, right? So I'm all about processes. I'm a process guy. The other thing is I wrote a book on nonprofit crowdfunding, real estate crowdfunding, equity crowdfunding, a bunch of different ones. And to me, what makes this such a powerful, incredible way to raise capital is that it includes a lot of these crowdfunding mechanics. So what are some of those mechanics? Number one, perks and rewards. When it comes to an equity crowdfunding campaign, you can offer perks or rewards. Now, the phrasing of this might be a little bit different, but even just listening to my podcast, the Crowdfunding Demystified podcast, which you can listen to on iTunes, Spotify, on this YouTube channel, etc., which you definitely should subscribe to on all of those platforms, you can even hear people more recently offering perks like NFTs. How cool is that? Right, offering perks to investors in the form of an NFT, also offering other style perks when it comes to being able to actually own the product, own a license of the product, these different things. These perks are what to me are kind of the bread and butter of crowdfunding, or one of the pieces of that. The second thing is that every crowdfunding campaign has a duration, and that's what makes crowdfunding different from every other way of raising capital. It's really not crowdfunding unless there's some kind of a goal and there's some kind of a duration, and that is the case when it comes to equity crowdfunding. There's definitely a certain goal which you might hit. There's also what's called a test the waters campaign, which I'm not going to talk about too much on this video, but in addition, there's a duration where the campaign is going to start and where it's going to end. And that duration, as I talk about in my other videos, creates urgency, gets people to take action. If you're like, Sal, why don't you go and do this thing? Why don't you go and, go grocery shopping? I'm okay, I'm gonna go and do that. But if I don't have any urgency, if like my kitchen cabinet or whatever is empty or whatever, I'm not gonna have any urgency. So it's important to always have urgency to get people to take action. It's what makes you go number one on your to-do list, and the actual duration is what creates urgency with crowdfunding. It's why it's an important mechanic. The final thing, like I mentioned, is test the waters, and that's kind of similar to a pre-launch, honestly, which again I documented in some of my other books. I'm not going to go too much into a pre-launch on this video, but definitely check out my other video on marketing to learn more about that. So first of all, just as you're hearing this, the first thing that you should take away is that this is huge, this is massive, this is growing in, it's almost like an exponential growth curve, at least from what I'm noticing, and I'm trying my best to document that for you on this channel. The second thing is that now people who are ordinary individuals who aren't Mark Cuban from Shark Tank, or Kevin O'Leary, or Barbara Corcoran, who are millionaires, right? Now ordinary people, everyday people, can invest in startup companies, which is kind of opening up the floodgates in my opinion. So this is huge, this is major. Pay attention to the next section of this video. So before I get into the next element of equity crowdfunding, which is kind of like the deals and the types of deals, if you are interested in really kind of getting this from the source and you really want to find out if this is right for you, for your business, and you're an entrepreneur, for your startup, for whatever you're trying to do, make sure you book a coaching call down below. We can do a one-on-one intensive coaching call, can review all of the things that you're trying to do, what you're trying to accomplish, create action items and homework for you, and really introduce you to as well a lot of the resources you might not know about in this industry. So this is a must. I'm telling you, this is like literally the best ROI that you're gonna get in this entire process. So make sure you book a coaching call one-on-one with me down below if you're interested in learning more, and also talking about even if you want some help when it comes to running this equity crowdfunding campaign. Okay, so the other thing that defines equity crowdfunding, in my opinion, is the deal, right? So again, this is a process. This is a process. I can't underestimate this as much. This is a process, and I would underline that if I could, right? A process. So the first part of the process is understanding the regulations. The second part is understanding the deal that you're going to be offering. Okay, the deal that you're going to be offering can determine whether or not this makes sense for investors that are out there. It is as crucial as how valuable or how useful your product is when it comes to other kinds of marketing, right? So if you're trying to sell products and you got a really bad product, most people are not going to be interested in buying that thing, right? You might have really good marketing, really fancy marketing and stuff, but if they come to the page and they realize it's a really bad product, they're like, I'm not going to buy this, right? Same thing goes with equity crowdfunding. It's like you need a really good deal to offer and to market people, otherwise they're not going to convert into being an investor. So let's kind of go through a couple of the elements of a deal.
Want to take all the stress out of fulfilling your Kickstarter rewards? FulfillRight is the turnkey solution that puts product delivery on autopilot. The Top Campaigns uses trusted high-tech provider to store, package, and ship their products. Focus on growing your business. Leave shipping to the experts. Don't wait. Get a custom quote from FulfillRight today. Link in the description.
First is that you could offer preferred stock or stock, and that is referred to as a priced round, okay? So the securities have actually been priced out. And that's gonna kind of, to me, be the most transparent way of actually raising capital for a lot of investors that are out there. However, again, that is very debatable. The next would be future shares. Future shares in the company. That could be something considered, for example, like a crowd safe or a safe, which was popularized by Y Combinator, I believe it is. So with this, people are investing in the company, right? But you're not actually doing a priced round. So what that means is that the next time that there's an investment in the company and you get the big boys involved, you know, the VCs and lawyers and all that kind of stuff, they're gonna actually do a price round. They're gonna price out what your asset is worth essentially at that point in time. And then your stock is then gonna have more value. It's gonna be able to actually determine that value. So you haven't really priced out that round when you're doing a future equity, right? When you're doing a crowd safe or something like that, you're basically betting on the company and saying, yes, I want in now, betting that I'm going to get better terms in the future, and as well, obviously, the valuation is going to make a lot of sense in the future. Next thing would be convertible debts. I'm not going to go over this too much, but so convertible debt, being able to convert that debt into equity at a future point in time, that could be one type of deal. Others would be loans and or debt. So a company that's offering a loan or something like that in order to, you know, maybe shore up capital as you get to the next phase of some kind, they're offering that on an equity crowdfunding platform. Others could be revenue share, dividends, etc. There are two quick things I will say here when it comes to this. Most tech companies are not going to be offering dividends in that kind of way, just kind of by their nature. Maybe if they're a different type of company and they feel like they can't allocate capital within the company, they might be offering dividends or something like that. And finally, when it comes to loans and debt, this is exactly why I'm pointing this out. Which is, had you invested in Google when it just started, but you basically were investing in their corporate debt, like they issued a bunch of debt, and you decided to invest in that, and maybe you're getting like 8% return, right? Or really good, like 10%, right? But probably more like 5 to 7 or, you know, around there, right? It's gonna depend. That is not a good investment because you think about it, Google's stock appreciated so much over that lifetime. So you would rather, if you have an early stage investment, to probably own equity in that company. So you have to be very mindful of the deal that you're offering investors because that can make it attractive or not attractive. If they're like, you know, I think this company is not going to raise a future round of capital, why would they invest in a crowd safe, right? Why would they invest in future equity if you're never going to do a price round in the future? So you have to think a little bit just through these things when you're offering something under an equity crowdfunding deal. Another major difference that I would also argue with these deals, and again, I'm using that kind of terminology, right? Just to kind of make that a little bit more sense, is that the liquidity aspect when it comes to an investor is very different with equity crowdfunding. So hear me out here, and we're gonna just spend a little bit of time on this, and then I wanna mention one key important resource, and we're gonna kind of cap this video because it is getting a little bit longer here, right? So first of all, what about liquidity, right? So think about the stock market. Okay, why does everyone love the stock market? People love the stock market because number one, it's very easy for them to cash out. Number two, very easy for them to see their valuation or, you know, their portfolio. What is that valued out, right? And they can also see the ebbs and the flows of the market very transparently and decide and forecast and predict things when it comes to that. And that's because the stock market is actually not a primary market. It's actually a secondary market. So the stock market, you're actually trading shares of stock which have already been issued at a previous point in time. It's not an initial public offering, right? You're basically trading baseball cards that have already been made, right? If you want to, or Pokemon cards that have already been made, right? And you're just trading them around, and the valuation of those are changing over time. So it's a bunch of companies that you have ownership or stocks, and you're trading them around. They've already been issued, and the prices, the valuation of those companies change in real time, right? And also then you can trade them depending on the market hours and those things. It's different with equity crowdfunding because when you're offering an equity crowdfunding campaign or you're doing a deal, there isn't yet an established market when it comes to the secondary market, okay? Now, some platforms are trying to change that. I think Start Engine is actually doing a really interesting job there, and you can kind of learn a little bit more about that on your own time. But I would say in general, there is not a secondary market for many of these shares, which means it's very illiquid, right, to use a finance term. So if you're investing in a startup company, you're probably gonna be expecting your return at a much longer duration or at a future point in time when there's some kind of what's called a liquidity event. So liquidity event could be something like the company is sold and you're able to then cash out, the company goes public, or in some rare cases, they'll actually allow existing investors and they'll try to buy out existing investors with that company, or there's some kind of an initiative that goes out there, or there could be very small transactions that happen within investors within that company, right? So this is something that I would say is a liquid at this point in time. Might be different in the future. I might be wrong at a future point in time with this video, right? There may be a secondary market of some kind, which would be so neat and so cool, and I actually really do hope that there is. But that is a major key component of a deal, is that those investors understand that, right? It's more of like they're buying a house versus just buying a stock. There's gonna be a long process in order to sell that thing. It's gonna take time. It's really for the long haul. If you found this definition to be useful, first of all, I got a great course for you, man. Go and check out the course I have at crowdcrux.com/equity course that will walk you through. All you gotta do is enter your name and email. It's a free course. We'll walk you through equity crowdfunding and kind of get you up to speed when it comes to that at crowdcrux.com/equity course. I also got a great book out there. We'll link up the audio version for you called Equity Crowdfunding Explained, that you can check out at crowdcrux.com/equity audio. And finally, if you really want to talk about how this could work for you, for your company, if you want a little bit more understanding of how this industry works, you can book a one-on-one coaching call with me at the link down below at crowdcrux.com/coaching. I'll do those. Sometimes I do close up the coaching calls because I get so busy, right? But if it's open right now, you can book a one-on-one coaching call with me. We can get that squared around ASAP, and it's an intensive call going through all the different aspects of what you need to know when it comes to this industry, the resources, the tools, the homework, the action items, all of that. We'll deliver that and we'll get that done ASAP. And finally, if you did like this video, give me a thumbs up, let me know. My name is Salvador Briggman. Come subscribe to this channel, leave a comment down below if you liked it, show me some love, and I will see you next time.